Hello and welcome. Good morning, everybody. Welcome to our fortnightly market outlook webinar. I'm Devarsh and I'm joined by my two colleagues, Nagaraj and Siddharth. Hello, Nagaraj.
Hi, good morning, everyone.
Good morning, Siddharth.
Yeah, very good morning. Welcome to the webinar.
All right. So without further ado, we'll start with this webinar. So this is our fortnightly market outlook webinar where we present to you the important happenings over the global market, Indian market from technical perspective, from derivative perspective. And in the end, I'll try to summarize what is our overall outlook for the next fortnight. So if you remember, at the end of the March, we started with uh, a prediction that everything was gloomy and gloomy. People were very bearish. There were reports which were suggesting Nifty will go to 16,000. Some were telling 12,000. At that time, we stuck our neck out and we said that the markets are going to have a pullback rally at the end of the March. For the April series, we came out with a very aggressive and bold call. We also put it out in our Twitter that we are expecting markets to rally. Then when the rally started, after a month or so, we came out with another tagline that markets are going to go faster from here, higher from here, market looks stronger, and global rally is about to happen. Last time we said that we make hay while sun shines. There is everything which is aligning for the markets, and markets are likely to make a new high. We are trading at a new high. A lot of investors who have followed us have been making money. We have been receiving a lot of appreciation and accolades from the branches, from the people associated with us, and they have been able to make use of all the fundamental and the technical calls which we have been putting out. Now is the important question is, at this high levels, what next? So my colleagues Nagaraj and Siddharth will share their opinion based on data, and in the end we will try to summarize what is next for us. But before we go there, let's just look at the happenings over the last fortnight and last 1 month in the international markets. So markets like Japan, as we have been pointing out, are breaking out after the 33 years of consolidation, and they have been top performance as we have been expecting for last couple of webinars. So Nikkei has a growth of 7.4%. Nasdaq went up, S&P about 6%. Dow is lagging. The technology stocks are giving more returns than the industrials. In India also, as we have been pointing out over the last 1 month, Sensex and Nifty has done well, but mid cap and small cap have done over the last 1 month. From last fortnight, we have pointed out that now is the time for large caps to perform. There will be short covering, and we should be cautious on mid cap and small cap. Gradually, they will lag the index, and exactly that is what is happening. The Sensex and Nifty has done well back of short covering, while mid cap and small cap are little falling behind. The international market in last fortnight, the speed has reduced. The some of the markets have had corrections also, like Hang Seng is down by 5%. Let's look at the India. What are the top performance? So IT is relatively doing well. As we pointed out, pharma, we have come out with a two B's recommendation also. Apart from our fortnightly market webinar and our MTF and fundamental recommendations, we have two outstanding recommendations on ETFs. One was on Nifty IT index and another was on Nifty Pharma index. And as you can see over the last fortnight, technology and healthcare are the two which are doing quite well. Now we are in a process of coming out with a third one, and we think that the PSU banks can also do well from here. So from here to next fortnight, you can look at PSU banks as a sector. That's where we feel there could be some outperformance compared to market. Foreign institutional investors, as I've been pointing out, that in the second half, we are expecting more flows into India. And as you can see, the trailing 12-month rolling FI figures have gone into positive, and quite a large number. 21,228 is the cumulative figure of FIs over the last 12 months. $21,228 million. International markets compared to the the United States indices. That's where also we have been pointing out that now is the time money will move from American markets into emerging market. Money will move from international markets, from US market into international markets. And international stocks relative to global bonds is now breaking out. So this is suggesting that the money will move not only from the American markets, also from the international bonds into international equities. Now let's look at the economic calendar. So most importantly, Tuesday on 4th of July, US will celebrate that Independence Day holiday. So that market is closed. So on Monday evening, we will not have any, on Tuesday evening, we will not have any international cues. So from Tuesday to Wednesday, our local markets will drive the indices. Other than that, routine economic data over the next fortnight. Last fortnight was very heavy for the monetary policy. This fortnight, we don't see any important events. What has happened? The growth, GDP growth in US, which was expected at around 1.5%, it came to 2%. So growth gave a positive surprise. Inflation also gave a positive surprise. The favored inflation index of US Fed, the PCE, actually came in little lower than their expectation, and it is the lowest since 2021. So inflation is low, growth is higher, and that's why you see the Nasdaq and Dow doing quite well. Nasdaq is up quite handsomely over the last year to date. From January 23 to June 23, it is up about 30%. The Dow is also up about 5%. Here also, compared to India, we have been telling you that small caps are actually underperforming in American markets. Only, if you remember my last webinar 15 days back, I told you 7 and 8 stocks are only performing in America. Out of S&P 500, 492 stocks are actually underperforming, and that is being depicted by this. So the rally in US market is not very sustainable. The 30 index, 30% growth in Nasdaq is not very sustainable. There we are expecting correction over the next fortnight. Technology, consumer discretionary stocks are actually benefiting. The industrials and energy are lagging there. Small caps are underperforming, large caps are outperforming. So that's all I wanted to share from the American markets and the global markets right now. Now let's first look at the Indian technical and derivative perspective, and then in the end I will try to come and summarize the situation at the overall level. So now I'd like to invite our colleague Nagaraj to share his views from the technical perspective. Over to you, Nagaraj.
Thank you, Devarsh. Is my PPT visible?
Yes, it is visible. You need to go to into yes. Now you can start.
Yes. Yes. Good morning, friends. We will start with the technical aspects of the market, how the Nifty's behave technically, and what are the patterns, what is the outlook for the Nifty for the next fortnightly, step by step. We'll start with the Nifty daily time frame. Friends, what we can observe on the chart is Nifty has displayed a sharp upside momentum over the last 3 sessions. What we can observe are long bull candles with the gap up openings. Unfilled gaps in between is indicating that bullish runaway gap. Normally, runaway gaps are formed in the mid of the trend. So this upside momentum is likely to continue for some more time, and we'll see the next time frame. On the daily, the RSI has turned above 60, which is indicating the strength of upside momentum in the market. On the weekly time frame, the friends, what we can observe after the formation of negative type candle pattern, Nifty has witnessed a long bull candle this week and decisively broken above the hurdle of 18,900 levels, which was there over the last many sessions, and formed a long bull candle. This long bull candle indicates the decisive upside breakout, and also this negates the negative candlestick pattern of the last week. So in the sense, we are going to have some good momentum, good traction on the upside for the Nifty, at least for some more time in the near term. On the monthly time frame, what we can observe is the larger time frame remains intact after a decline of last 4 months in the previously. In the last 3 months, Nifty has witnessed sharp upside bounces, and we observe the bullish bullish candlestick patterns at the lower levels, and after that Nifty has moved up. This long bull candle of the last 3 months is indicating advancing 3 soldiers on a monthly chart, which is confirming that uptrend continuation pattern. And in market is also in an attempt of moving decisively up on the upside at 8,900, 9,000 level, just already began the upside breakout, and we are likely to see further upside in the near term. So now the question is, what is the next target for the Nifty? We have observed, derived the Fibonacci projection. We have taken the 3 important points on the weekly time frame. That was a projection taken from the June 22 bottom. This was the June 22 bottom to December 2022 top, and we have taken the March 2023 bottom. With these 3 important bottoms, we come out with the important upper trajectory for the Nifty is as per the Fibonacci projection. 1.236% projection comes around 19,500 levels, which is around 19,497.36, round about 19,500 levels, which is 1.236% Fibonacci projection. After that, next projection comes, which is 1.382% projection of these 3 top bottoms, which is coming around 19,812. So rounding about 19,810. So these 2 levels, which is 19,500 and 19,810, are going to be important hurdles. Friend, as per Fibonacci projections, these are the levels, these are the probability of the market reaching, as per the Fibonacci theory, these 1.236 and 1.382 of the last important top bottom indicates that we are likely to see further upside towards this hurdle. But this can be considered as a hurdles at the higher levels. There may be in between downward corrections. We will see how the things will pan out over the period of time. Friends, next, mid cap and small cap. We have seen exceptional upside momentum in the mid cap and small caps. We have seen last 13 weeks, both mid cap and small cap have witnessed a significant upside momentum. Last week, we have seen some consolidation pattern, some minor negative kind of a pattern. That negative pattern has been taken out in this week with big bang. Both Nifty mid cap and Nifty small cap has risen above this strong hurdle or a negative pattern of the last weekly time frame. This indicates that upside momentum is likely to continue. We have seen, as compared to Nifty, we have seen a gradual upside momentum in the broad market indices over the last 3-4 sessions, as Nifty risen sharply with the with opening gaps, and mid cap and small cap has risen gradually, but they have almost overtaken on the recent hurdles. So I'm expecting the upside momentum to pick up in mid cap and small cap stocks and small cap sectors. So we are likely to see some big bang movement in some of the selective mid and small cap segments over the next 1 or 2 weeks. So the conclusion is, the underlying trend of Nifty remains positive. We all know the market is continuously in uptrend, and we have seen recently upside momentum is picking up with the gap up openings and the Nifty zooming into all-time highs of around 19,200 levels. Even though Nifty has reached the higher levels, there is no signs of any tiredness in the market and no indication of any reversal building at the higher levels. So now technically what we sense after every rise, every reasonable rise, market sometimes shows some tiredness or some reversal kind of a pattern starts to building. What we can observe over here, even though market has moved up recently with the significant upside momentum, even though market reached the new all-time high of around 19,200 levels, there is no signs of any tiredness in the market, and there is no clear indication, there is no confirmation of any reversal pattern building at the new all-time highs. That indicates this juice upside momentum is likely to continue some more time. So upside target to be watched, as I mentioned, as per the Fibonacci projection, is 19,500 levels. If we break above 19,500 levels, we are likely to hit the next upside of around 19,800 levels. Friends, do remember that this is a market. Intermittent downward correction in between can't be ruled out. So any downward correction, any healthy downward correction in between is going to be a buy on dips opportunity. For the longs, any long positions created recently or going to be created in the next is going to be the strong support of 19,000, 18,900 to 19,000 level. That 18,900 to 19,000 is a significant, that was a significant resistance in the past, and after the more and more effort, this has taken out with a big bang recently, and market zoomed into 19,200. As per technical, we believe that broken important support is going to act as a strong, open previous resistance is going to act as a strong support for the Nifty. So all the long positions need to be placed with a strict stop loss of 18,900 to 19,000 level. And sectorally, friends, banking, FMCG, IT, automobile, pharma, metals are expected to outperform in the short to near term. So upside momentum is likely to pick up in a broad market index like mid cap and small cap indices, and I'm expecting the mid and small cap segments is likely to move further, which show some good upside traction in those sectors. So I'm going to end my side from the technical aspects. So now I'm going to invite my colleague Siddharth Deshpande. Yeah. Siddharth, I'll open your PPT.
Yeah, please.
So is this PPT is visible?
No, it's not.
Okay.
Yeah, it's visible now. I think you have to make a full screen.
Okay.
It's not full screen, Nagaraj.
F5.
Yeah, hi, good morning, friends. Today, I would like to present the latest development in derivative markets, focusing mainly on Nifty and Bank Nifty indices as well as sectoral indices. Let's dive right into it. Yeah, next, Nagaraj, next slide. Yeah, starting with the Nifty, we have witnessed a significant rise of 2.80% this week, pushing the index to the reach all-time high level. On daily basis, the Nifty has risen almost 1.13%, accompanied by rise in open interest, indicating a accumulation of long position in the Nifty future segment by retail other participants. Despite trading at all-time high, the implied volatility levels has remained constant throughout the week, suggesting a lower premium option for the segment. The put call ratio for the Nifty is currently at around 1.57 level, edging closer to the overbought level of 1.70 level. That signifies the increasing dominance of call option in the market. Yeah, moving to the Bank Nifty. Bank Nifty future, we have seen a similar build-up of long position with a 0.089% rise in levels with a rise in open interest level. Both Nifty and Bank Nifty is currently trading at a all-time high level. The IV of the Bank Nifty has remained constant throughout the week, indicating a lower premium for the option in the segment as well. The PCR for Bank Nifty is gradually heading higher and approaching towards the overbought territory, but still has a room. Now let's focus on Nifty and put call. Yeah, Nifty call and put call option, we have noticed call writing in the 19,300 to 19,500 level, suggesting a near-term resistance zone. On the flip side, the Nifty is expecting find support near 19,000 level, which has the highest open interest input option segment. A close above 19,500 will result in a fresh buildup of long position and potential driving Nifty towards 19,800 level gradually. On technical front, also the Nagaraj has suggested that 19,500 and 19,800 both are important level for the resistance. Conversing strong support is expected around 19,000 layer where the maximum put writing already happened. So 18,900 to 19,000 will be a good support for the Nifty in the coming sessions. I already mentioned that PCI is currently at 1.57 and which is approaching towards overbought territory of 1.70 level. Yeah, next Bank Nifty. Yeah, Bank Nifty put option. Put writing is seen around 44,500 level, indicating a support around there in the short term. However, the Bank Nifty is likely to encounter resistance near 45,000, followed by 45,500 level, where the maximum call writing is already happened. A closure above 45,500 level will trigger further build-up of long position, potentially pushing Bank Nifty towards 46,000 mark in coming sessions and beyond. Now we'll go towards the next slide. Yeah, this is FI long to short ratio. It's almost reaching more than 2 level. After it was moving around 1 level for almost 2 weeks, and after that it has given a breakout, and now it is heading. It's currently trading at 2, which is a good indication. Where that indicates that FI is creating fresh long position in the market. Yeah, next slide. This is a sectoral open interest data analysis where we can see banking, finance, automobile, technology, and pharma as a build-up of fresh long position, which suggests that these sectors will continue to perform, whereas cement and textile and reality saw a major minor short build-up. So we may see this underperforming in the coming sessions. Yeah. Okay, this is a heat map of stocks. Basically, HDFC, AMP, Biocon, Indiabulls Housing seeing a fresh long build-up, whereas PFC, Canfin Home seeing a long unwinding of positions. MCX, JK Cement, Dalmia Bharat, and Ambuja Cement saw a fresh short build-up, whereas Infi, Infosys, and Wipro saw short covering. Majorly, IT has yesterday risen with a good rise, so I think that we seen major short covering. Yeah, next slide, Nagaraj. Yeah, this is in conclusion, outlook for the Nifty suggests that substantial long build-up in Nifty future with the highest call option open interest near 19,500 level, indicating a strong resistance zone. On the hand, put writing is seen around 19,000 level, suggesting a solid support, while call writing around 19,300 to 19,500 level point to a resistance. After 19,500, traders can expect 19,800 level next level. As for the Bank Nifty, we have witnessed significant long build-up in Bank Nifty futures on a daily basis. That expected trading range for the Bank Nifty index is in the coming weeks projected between 43,500 to 45,000 level. Call rating at 44,800 followed by 45,500 level, indicating a market expectations for higher levels for Bank Nifty in upcoming sessions. And support level is identified around 44,800 and 44,500 gradually, where the maximum put rating has already happened. So in conclusion, basically Nifty and Bank Nifty in coming session we are expecting higher levels. Yeah, that's all for my side. Over to you, Devarsh.
All right. Thank you, Nagaraj, and thank you, Siddharth. So, as we have seen a sharp rally here, what is the outlook now? Howard Marks has written a very important book and showed us that bull markets are usually born on pessimism, they grow on skepticism, mature on optimism, and they die on euphoria. So right now, somewhere here, we have basically maturing the bull market. We are between optimism and euphoria phase. So right now, markets are looking good. As Siddharth and Nagaraj pointed out, we are in the last phase of this euphoria phase. So our advice is from our favorite movie 3 Idiots, जैसा चल रहा है वैसा चलने दें. अभी कोई चिंता की जरूरत नहीं है. But next time, after the 15th, next 15 days, gradually you reduce your risk. You reduce your leverage positions into this rally. Short-term traders reduce your exposure towards the market. Longer-term investors can continue to invest. In next 15 days, जैसा चल रहा है वैसा चलने दें. After 15 days, we'll start becoming safer. So better to be safe than sorry will be the trailer right now. The movie will come after 15 days. What is happening in our recommendations? So from 1st of May, we have given about, from the recommendations which we have given, we have been able to book 49 e-margin calls with positive gains. Some of them which happened, AstraZeneca and Surya Roshni has booked in last week. Fundamental side, 57 recommendations. Lately, these 5 and another 4 have booked, achieved their targets. So the make hay while sunshine, we have given more than adequate recommendations to capitalize on this uptrend. This uptrend is maturing for the next 15 days gradually. Say we may go to 19,500 or 19,800 levels. In that rally from 19,200 to 800, gradually you keep booking profits. Gradually you play the shorter term index recommendation, the 1 to 10 days recommendation. Gradually reduce your longer term leverage positions. Around that level, we may see a correction, maybe as pointed out, say from 19,800, if everything becomes very frothy, a correction can come, and in after 15 days, in the next 15 days, a 1,000-point correction can also come. It may bring it to 18,900. Mid cap, small cap can correct. So right now, जैसा चल रहा है ऐसा चलने दे, but after gradually you book and reduce risk. Right now, superior earnings growth and persistent flows are the pillars of this rally. As long as these two are firing, market will continue to make new highs and superior return will come to investors who keep faith for longer term. Long-term investors, stick to your asset allocation, remain invested. Long-term SIPs are the foolproof method to create long-term wealth. Shorter term, after 15 days, there could be some political problem, some geopolitical uncertainty. That excuse will be used to book profits. So for a longer term investors, gradually keep money on the sideline. There will be an opportunity to invest. For shorter term, these long rollovers in Nifty and Bank Nifty, FI long to short ratio increasing up to 2, highest since December. All this makes us little cautious going into the rally over the next 15 days. After 15 days, we can gradually reduce the risk. So, abhi time acha hai, capitalize on this time, but after 15 days, become little cautious on the markets. That's all we wanted to share with you. Now, if you have any questions, we have about 10 minutes to answer your questions. So, depending upon the screen you are using, you should see a question mark symbol on your screen. Click on it, put your questions, and I'll be able to answer. Omkar, I'm not able to see the question answer window. Can you enable that?
Yes, wait.
Okay. Yeah, I can see it now. Yogesh Jeshwani is telling, oh, he has already left the webinar. He said that, can you explain in Hindi? So Hindi में मैं बताना चाहूँगा कि अभी market अच्छा है, जैसा चल रहा है वैसा चलने दे. After 15 days, become little cautious on the market. Yes, Urvashi is also asking us to speak in Hindi, so I've done that. What value of PCR is overbought? Darshit is asking. It is not a fixed ratio. It is the trend which is important. Right now, trend is higher, but it is reaching a higher level. Srinivas Kulkarni is asking from Gulbarga, whichever BNPL call which you give from the next day onwards, it is not available in BNPL because of the success ratio and because of the so much demand and so much money is made by the BNPL. The problem which we are facing is the problem of plenty. Lot of customers are buying on the very first day, and we are internal risk management limits for stocks of 20 crore, 25 crore, 30 crore. Those limits are being hit on the very first day, and that's why we are not able to increase the exposure on the next day. We have asked risk department, they are looking at the various limits. See, at an individual level, at a company level, we cannot have a large book on individual stocks. It is important from the risk management perspective. So I appreciate your concern, but it is a good problem to have. We will keep on giving you newer and newer MTF calls to generate your ideas. Okay, Bharat Sumaya is asking, what is our view on IT and pharma? So IT and pharma are the two indices where we have historically given you ETF recommendations to invest in Nifty IT and Nifty pharma Bs, and our view continues to remain bullish on them. They are near targets. Once the target is achieved, we will look at new opportunities, and from the look of it, we looks like it that the Nifty PSU banks or PSU bank Bs are the one where we will ask you to invest. So the conclusion is that our desk is that next 15 days remain bullish. Trend is our friend. We do not want to preempt any downturn. We will continue to increase the recommendation, but we will also reduce the risk. So from mid cap, small cap to large cap, from high beta to low beta, for shorter term investors, reduce risk into the rally over the next 15 days. Between 19,200 to 19,800, you gradually increase your exposure towards the cash, and then afterwards we will 15 days we will see what the situation is. Specialty chemical, Tarun Chansaria is asking, so specialty chemical is right now, chemical as a sector is in the doldrums. What happened after the COVID? Once the COVID was over, China had a lot of stock. They started dumping those chemicals into the Indian markets. The prices of those chemicals have gone down, and that's why all these companies who had a fantastic 2 years, they did a lot of capex, they increased the capacity, but the prices has crashed, and that's why chemical companies are not doing well. Once the cycle turn, we will let you know, and that time we will get into chemicals. Right now it is looking little for a short term, for next 2-3 months, it is looking like they will bottom out. So next 3 months, if you are a 2-3 year long term investors, you can think of chemical stocks. For shorter term, for next 2-3 weeks, it is looking like a consolidation. Sweta is asking, can we book profits in the large cap every rise so as we have liquidity to invest in the sudden fall? Yes, Sweta, you got it exactly right. Over the next 15 days, gradually keep booking profits and keep increasing cash. Saurabh, we cannot comment on HDFC and HDFC Bank as they are group companies, so I will not be able to answer. Rahul is asking what is the strategy to play. So we will keep on giving you strategies every Thursday. Last time we gave Fin Nifty, and after that we give Bank Nifty. Both those strategies have achieved good 20-25% intended targets. This Thursday also we will issue. After 15 days, most probably it will be a cautious strategy, but that I cannot predict now. I am just giving you a possibility that markets will be very bullish over the next 15 days. After that, we will be a little cautious. Support related questions or any related questions on IT, Dhanashekara, we are not the correct person. Please get into our customer care. They will be able to answer you. Amit, we cannot comment on HDFC Bank. Renu, HDFC Bank, HDFC, we will not be able to answer. So Bharat is asking on USD INR, good question. USD INR is likely to remain strong. A lot of money is expected coming into India. A lot of birdies we are seeing. Markets are getting huge traction from foreigners. So rupee is likely to remain strong over the next. Index strategy for the next week. Yes, Rakshit, we will come out with the strategy this Thursday. But overall, right now, bull spread is a good strategy to play in indices. All right. I think I've answered most of the questions. Any parting comments, Nagaraj? Siddharth?
Yeah, Devarsh bhai, you are told कि जितना दिन चल रहा है उतने चलने दो. Where even the market is also suggesting resistance around 19,500. So traders should be cautious at that level, and they may gradually build long positions, but try to book profit as and when they are getting good returns in the previous investments.
Nagaraj?
Yes, Devarsh bhai. Friends, almost we have covered everything with regards to technical derivative global market for the next fortnightly. So I request everyone to follow our recommendations. You keep on touch with the research team, and we have one more webinar of how to read the research outputs. So these are the things we can have. We can continue with that. We have a success ratio in our calls, and we want that to convert into a profit ratio for the customers.
Yes, Nagaraj, you have hit the nail on the head. Follow research recommendation, follow our advice on fundamental side, on technical side, on derivative side. We have been giving you excellent recommendations. Those who have been able to generate this recommendation into profit, you will be able to reap the benefits of this bull market. As Nagaraj pointed out, at 10 o'clock, we are doing a special webinar on how to utilize research effectively. Our colleague Vinay is going to conduct that webinar. I strongly recommend everybody to join that webinar and see how research is helping many relationship managers, many associated persons who are connected with HDFC Security to make profits, generate wealth, and increase business. So knowledge is the power, and at research we are trying to empower you with the information, empower you with the knowledge to generate that knowledge into cash. Thank you everyone for joining this webinar. We will see you over the next fortnight. Have a fantastic weekend and take care of yourself. Bye. Thank you.
Thanks everybody for joining the webinar.